Hey everyone, and welcome to From Waterloo to the Alamo. I'm your host, Traci Wilson, and today we have Brian Hurd, who is the Senior Vice President of Cardinal Financial. Brian, I'm so glad you're on the podcast today.
Good to be here.
And I'm excited to kind of hear about Cardinal Financial. You know, it's fun for us to get different companies and businesses, you know, restaurants, whatever sector it is that's, you know, here in Austin, of course, but, and learn more about them, right? Because everyone has kind of a unique vision and offers, unique things that are different than everyone else.
Absolutely.
But why don't we start out first, and why don't you tell us a little bit about your background and what kind of led you to the mortgage and lending world?
Yeah, it was a little bit of a winding path. I was actually born and raised in California, Northern California, a little town called Los Gatos on the coast, and went to school for graphic design. You know, I'm a very right-brain guy. And it's interesting now I'm in a very, very left brain world, but moved to, my dad is a custom home builder. He moved his company out here in 94. The building market in Northern California started to tank. It was flourishing here at the time, especially that brand custom range. So I went straight to Houston. I thought Houston was going to be about the same as Austin, which, all due respect to Houston, it's very, very different.
So your father came here to Austin?
He came here first. Yeah, he moved here in 93. I came out in 94 and went straight to Houston, and then moved to Austin in 99. Like half the rest of Round Rock, I worked at Dell for several years, doing large corporate account acquisition. It was about 2003 that I got into the mortgage industry. I actually got my license, my real estate license at the time, figured, okay, maybe I want to try that out.
Yeah.
Coming from a very rigid, Fortune 100 company corporate environment to the real estate world was a shock to the system.
Oh, yeah.
So I figured, okay, well, maybe I can combine growing up around the home building industry, maybe I can combine two worlds. I've moved into the lending side, and I've been there ever since. It was about first several years, I had to say about 2008 is when I finally shifted. I, like most loan originators, I worked with realtors and that sort of thing and refinances. 2008, kind of the light bulb came on. I said, you know what? I really want to focus kind of on my roots. Growing up, I cleaned a lot of houses, hopped in with my dad's crews, and that sort of thing on summer and winter breaks and all that. But so I'd been around it, but now I figured, okay, well, why not focus my lending career on the home building side? The thing is that's when the sky was falling in the industry. Yeah. So many people, there were very few people actually doing construction lending, focusing on the builder space. It was a perfect time and never looked back. So since 2008, I've really focused on the home building side. First as an originator, doing loans and loved working with clients. But then I realized my real passion was creating strategic partnerships with home builders, small, large, and everywhere in between, and then also helping loan officers grow in that space. It's different. It's not for everybody, and there's maybe 10, 12% of the LO population that really wants or has the patience to focus on it. So I moved over into the leadership side about 2014 timeframe, and I've been there ever since. So yeah, it's a long kind of meandering way to go. Again, I went to school I used to love to write and draw and all that kind of stuff, but it's just, life sometimes has a different path for you. So,
well, you know what though? I mean, the left brain, right brain, I think in the lending world though, you do have to get creative, right?
100%.
There has to be that creative aspect of it. And I feel like that's probably something that makes you stand out from the rest, right? You've been in the real estate, that kind of real estate world. You've been in the home building world with your dad. Yeah. You actually were boots on the ground. You were deep in it, cleaning the houses. I mean, it probably gives you a really great perspective from the start to finish with the whole process. Yeah. So that's probably why it makes you really good in the leadership aspect, because you can give probably something that a lot of other people can't give. Yeah. So, well, tell us, what are, as Senior Vice President of Cardinal Financial, which is, that's a pretty big title, I think, when you say it out loud, but tell us, what's one of your biggest responsibilities? Like, do you need to go out there and figure out, okay, look, we got to do something different than what all these other lenders are doing? Yeah. I mean, What is something that you thrive in with one of your responsibilities?
Yeah,
as
I think
SVP?
that's a really good question. And it's a one that, as I'm talking to new recruits and I talk to our loan officers, it's really important because I think a lot of people in my position, they tend to sit in an ivory tower and drink wine and eat grapes and collect an annuity off of their people all day long. That's not me. And I'm not saying, any approach is wrong. For me, I'm a firm believer in rolling up my sleeves and jumping into the trenches with our people. So, a lot of what that means is, again, a lot of loan officers that want to work with home builders, manufacturers, whatever, a lot of times they just don't know how to get started. So how do we train them up? How do we coach them up? Creating strategic, target lists. How do we engage with these types of builders? But inevitably, every single time it ends up being, what I want to know my loan officers really want to spend time and dedicate to going out and working with builders. But it's also really important that a lot of times it's hopping on a plane and then flying out to market, meeting face-to-face with the home builders, our loan officers, that sort of thing. I have one of those unique positions where I do get to talk to loan officers all the way across the country. And a lot of times, you feel like, because we're based in Charlotte, North Carolina, but we have loan officers everywhere. And we don't do the brick and mortar thing anymore. We just don't. Most of our loan officers are all spread out in the field. They still need that connection. They still want to feel like they're not out on an island, and we want to make sure that it's not just, hey, here's all the really cool tools, here's all the great programs and products and marketing, now go out and do it yourself. It's, here's all of those things, now let's go out and do it together.
Yeah.
Plus, it's also really important, if we're working with a builder in Denver, Colorado, that builder is going to want to know, well, hey, how is Cardinal, that's based in Charlotte, going to support a loan officer in Denver? That's, again, I don't think there's any real substitute for hopping on a plane, going out to market, shaking hands, and looking in the eye. I think that's still really important. A lot of it's product development, a lot of it's, helping our marketing team create marketing pieces, that sort of thing. But yeah, I feel like I'm at my best when I'm out in the field supporting our people. I work for them, not the other way around.
Right. Well, and I think a lot of people have lost touch, and I hate to bring it back to COVID, but when everyone kind of lost touch with like the face-to-face interaction,
So true.
and it isn't just with COVID. I mean, let's talk about the creation of email, right? And then email and then texting and, virtual everything,
Zooms,
right? So we've lost that personal touch, and there's just something about sitting with someone face to face and having a conversation that I think can never be replaced with a phone call or an email. You know what I mean?
And people want to feel like they're worth it.
Yes.
I had speaking of Denver, I had with one of my loan officers at a previous company, one of my favorite people, the builder, this was during COVID. And COVID, from a travel perspective, was built just for me. I love the actual destination, but sitting in airports and sitting in lines and being crammed in an airplane is not fun.
Yeah, no one likes that.
But when you had whole aisles to yourself, that was fantastic. But went out and met with a developer in the Denver area, and ultimately a huge part of their reason for doing business with us was the fact that I got on a plane, went out there face to face, said, you know what, I couldn't even get the lenders that we were talking to in market to come meet with us face to face. As you said, so important.
Yeah. Well, I mean, I've said this before, buying a home is the most important thing someone's going to do.
Emotional.
Or whether it's the builders, right? They're building a home. This is their livelihood, right? So I mean, it's very important. And the fact that, we know time is money, and we know that, people, if you make time and you actually get on a plane and fly out there, to them, they're like, wow, I feel valued.
They feel important. They feel valued. They feel supported, and hey, you know what? The fact that you're based in Charlotte and I'm based in Austin, it's not a scary thing anymore.
It's not a scary thing anymore. Okay, well, I'm really interested to ask you about this because I think it's something that's pretty unique to Cardinal Financial. You guys have been kind of, I wouldn't say pioneers, but you guys are doing something with manufactured loans, manufactured home loans. We know that, manufactured housing is super important for affordable, like to be able to afford homes, right? Why don't you tell us a little bit about your program and how you guys are able to give loans on manufactured housing?
Yeah, it's something that's near and dear to me now, which is strange because, you know, I grew up son of a custom home builder, and it's kind of the opposite end of the spectrum. And, you know, I focused on that market for a long period of time. You know, I'll back up just a little bit, kind of explain how I got into it. So it was 2020, January. It was right before COVID was really a thing. And my CFO and my VP of construction ops at the time, he goes, "Hey, come out to Louisville with me." And I had my second shoulder surgery. I was in a brace. It was like, Traci, it was like 8 degrees out there. I did not want to go.
You don't want to go, especially when you have surgery and being in that cold
and
weather.
Travel and what's this manufactured stuff?
Yeah.
You know, to me at the time, it was just mobile home. And we talked about that earlier.
Yes. I think people associate manufactured. They equate it to mobile home, which
I'll be honest, I did. And, you know, the company I was with at the time, and we did manufacturing. We did it for years, but it wasn't a major focus. So begrudgingly, I said, you know what, I'll go. I'll tell you, that changed everything for me because, and they do a big event in Louisville every year. We just went a couple weeks ago to walk it, touch it, live it, breathe it, feel it. It changes perception, perspective, all of that. You know, these houses, it's not your grandmother's mobile home. Right. You know, and that's kind of the best way I can describe it. The finish out is just amazing.
More modern, right?
Very modern, you know, but a lot of the same features that you're going to find in, I mean, you're not talking, you know, $300, $400, $500, $600 square foot homes, but the finish out in a lot of ways it's equivalent and a lot of times superior to what you'll find in a lot of the public builders out there.
Right.
You know,
some of the box builders, right? Like
exactly.
Yeah. That's a good
exactly.
point. Would you equate like this type of manufactured homes, like the more modular style, like more comparable to like, you know, people doing tiny homes?
No. So I think so. Here's the deal. I mean, there's a number of different alternative housing types out there. You know, you've got tiny homes, you've got container homes, you've got modular. They all like to make sure they're very distinguished from the other one.
Right.
You know, if you talk to a lot of modular builders out there, they want to make sure we know that, hey, we're modular, we're not manufactured, that sort of thing. I think that tiny homes have an absolute place in the market, but they're not really, I don't see that, and I could be wrong, but I don't see that really getting to the point where that's going to help housing affordability and attainability at scale.
That's true.
To the level of manufactured. Manufactured, you know, I think last year, somewhere just shy of 100,000 homes were built. And yeah, that represents probably 10-11% of the market. And I think that's going to continue to grow. So manufactured, I think it's a lot more of a scalable option for, you know, sustainable growth in housing and that sort of thing. And these are, you know, tiny homes, again, they kind of have their following and their place. A lot of times they're
very small footprints.
Very small footprints.
So what's the footprint for these modular manufactured homes?
Really good question. So, you know, and there's all different types. I mean, there's the single wides that you see on the side of the freeway. You know, that
when you can't pass on the highway.
You can't pass on the highway.
Which you have to have patience. And we both know we don't have much patience.
Yes, as we were saying earlier, I don't. But, you know, so there is that. But then there's double and triple wides. But what you see though, especially, you know, Champion and Clayton have an amazing cross-mod product. And cross-mod is a term developed by Manufactured Housing Institute.
Cross-mod, you
Cross-mod, yeah. Okay. And it's supported heavily by Fannie and Freddie. They both have their own mortgage programs. Fannie has their Image Advantage. Freddie has their Choice program. It's different. So, and what it is they're higher roof pitches. They've got dormers, front porches. A lot of times they have garages.
Wow. Because
usually when you see a manufactured home community, you see them stacked sideways. Right. Little wooden steps up the back. They got a storage shed in the back. That's fine. That there's a place for that. But I'm telling you, this stuff is, you know, now what we're doing is we have a community in Northern California. We have one in Utah. There's a massive community called Fruition in Denver, Colorado.
Fruition?
Fruition.
Okay.
Yeah.
It'll be interesting for people if they're interested to look it up.
Oh, and I hope they do.
I just did look it up on Clayton's just to see what you're talking about because I haven't heard of cross-mod. And for the viewers, the pictures on here, it looks like a house. It does not look like what you think of when you think of.
And that's the thing is, it is a house, and you can. It's virtually indistinguishable in almost every way. They're permanently affixed foundations.
Right. I was about to ask.
There's
that.
brick on here.
Yep.
Like,
oh yeah.
Wow.
Yeah.
Well, and so I'll use my the project that we're working on in a little town called Orville, north of Sacramento. It's a 132 unit community. A gentleman named James Burkett, the developer. He's a real visionary in this space. He's using Champion's product, and Champion has an amazing cross mod line called Genesis. But it is a master plan community, hike and bike trails, has a whole park and everything. When you drive in there, and it comes online in a few months, you won't be able to tell the difference. It looks and feels not just the inside, but the exterior. It looks identical. And, again, the finish out is spectacular. So it's definitely a different product overall. In fact, I think there's a few houses outside of, I don't think there's a few in Lockhart that are probably one of the best representations that Champion did.
You can go look. He's from Lockhart.
Yeah.
I live in Lockhart. I have no idea what you're talking about.
Yeah,
so that's a good
I will send
thing.
you the link, but it's probably one of the best physical, representations of what is capable with manufactured housing. It's a beautiful model that Champion did. Natalie Roberts, I know you guys know, she was involved in that.
Very cool.
Really cool stuff.
So tell me this. So do you guys mainly focus on like those master plan communities for the lending, or are you able to say, oh, hey, I'm Traci Wilson, I'm coming to you because I'm buying a manufactured home and I'm putting it on my property. Can you give me
both?
You could do it.
Yeah,
so you
and
can
I
do
would
it
say
personally
correct. I would say majority of what we do, and we've done in the 3 years that we've really been doing construction loans, we've done about $1.5 billion of manufactured home loans.
Wow.
Majority of that is all what you're talking about, traditional. Talk to a retailer, a dealer, whatnot. Purchase the home, have it delivered to the site, and what we do is we'll do a construction loan, very similar to what you would do for a custom home or anything else, but we'll fund the purchase of the land if they don't have it. We'll fund the purchase of the home and then the installation on a foundation, all the site work, all the landscaping, all that kind of stuff. That is how it's always been done. The only thing we don't do is there's two different types of loans. There's land home, which is what we do. It's secured by real property. And there's chattel. Chattel is a personal property loan, kind of sort of more similar to an auto loan type situation. The problem there, that is what's dominated the market for so long. And all due respect to the companies that do chattel, the problem is we're trying to help solve the attainable, affordable housing crisis. Those types of loans can be higher rates, higher fees. What we're trying to do is fund those and say, hey, you know what, you're buying a home. It just happens to be built in a factory, but you can also finance it the exact same way as if you walked into Lennar or KB or anywhere else. So we do that. That's majority of what we do. It's just now that we're really starting to work with a lot of developers and builders and landowners on full-scale communities.
Right.
The problem is perception, and there's a huge amount of NIMBYism, not my backyard, because they don't understand it. I've sat in a lot of city council meetings and you can try to describe it to them, but until they actually see it like I did in Louisville, it's really hard. But if you think about the ramifications, it's not just affordable. But look what's happening in Southern California, and regardless of what you think is causing climate change, that's irrelevant. It's happening, whether it's cyclical or man-made, whatever. We are seeing more of this type of stuff. What I think a lot of people don't realize, the typical house, there's some builders that are doing it back down to 4 or 5 months, but I think the average is probably 7-8 months for a build. You can do a manufactured home in 4 to 6 weeks.
Yeah.
Now that's the time, you put in the order, the house is built, and then delivered to the site. The other really, really cool thing, and my friend Andrew Bryant took me with Clayton, took me on a tour of one of their factories up in Waco. The entire amount of waste from a 1,800 square foot house fits in one of those big, 80-gallon drums.
Wow. So you're definitely utilizing materials and eliminating waste.
Yeah, I mean, it's built and look, it's never going to replace stick built. I say never, but it's sustainable. There's so many advantages to it. Plus, if you need to get housing in a market that much quicker, I mean, it's heartbreaking what's going on in Southern California. Can't fix the permitting part.
Right.
And don't even get me started on the whole regulatory part because regulatory, I mean, considering that accounts for almost up to 40% of the cost of a house.
Yeah.
Plus permits, I'm hearing they're taking, they could take 10 to 12 months in areas like that. That has to be fixed separately. But being able to bring in real quality housing. It doesn't even have to be manufactured. It could be modular, which Travis was talking about. Modulars, a whole different world. You can have $2, $3, $4 million modular houses that are just incredible.
Yeah. The price. That's what the other question I was going to ask you.
Hey, I'm Brandon Sparks with Nautilus Lending, based right here in Central Texas. We're a full-service mortgage operation and brokerage, serving Greater Texas as well as Florida and Tennessee. One of the greatest things about our shop is our ability to facilitate creative financing. What that means is that anything legally possible, we can get it funded. You want to find out more? Reach out to us, www.nautiluslending.com. That's www.nautiluslending.com.
Are the loan, like the rates on modular housing, are they more competitive than your typical single family housing?
No, they're going to be basically the same.
So
we consider, as a lending institution, we consider modular housing, off-frame modular, identical to stick-built.
Okay, single-family homes, yeah.
Manufactured, there are some differences. There are some LLPAs, loan level price adjustments on manufactured. Fannie and Freddie have done a really good job of developing their programs to get rid of some of those. And in some cases, when you use their MH Advantage and Freddie Choice programs, you can get better rates and mortgage insurance on certain types of manufactured than you could even on a traditional site.
Traditional.
Yeah.
So
it's getting better.
I guess, can you give me an idea of what, let's just give like an average price range of what a loan would be for a modular home. Let's do the land and the manufactured home together.
Yep.
But let's give me an idea of like what, if it was just on the home, an idea. 275. For what kind of square footage, you think?
Probably 1,600 square feet.
Okay.
And the range is spectacular because, yes, you still can see if you do a chattel loan, which is just on the home itself, that you'll still see some sub 100,000. But, we've got projects in Chelan, Washington, which is a really cool little wine town. These things are going to be north of $1 million.
Wow, but square footage is
18 to 22, 23. Wow. But they can be up to 2,800 square feet.
Because it really depends. Like when you go and you're picking, like you said, 4 to 6 weeks to pick this modular home. I assume there is some customizations you can do to it.
So yes and no. There's actually very few on the manufactured side. Now, I say that because you still have to, it's built in a factory, and a factory has to be, there's certain things that have to be done to change. So, your big guys, your Champions and Claytons and Cavcos, they don't want to do it like from buyer to buyer, but like developers and like James, this project that he's working on, they highly customize it. And I know Natalie was a big supporter of Champion and that whole Genesis product that they're actually using. Same one they have out in Lockhart, but they're highly customized. So when you look at those, they're very different than what you'll see on the side of the freeway.
Right.
So there is, and you have to a degree because municipalities, like we were saying earlier, we don't want this.
Right.
Well, you have to make the product look really attractive. And some of them are more traditional, some of them are highly modern, and they're just beautiful. So there are customizations that can be done, but usually you want to do that at a scalable level.
Right.
Modular, strict modular, very different. And highly recommend. There's a lot of great resources out there, but a guy named Ken Semler, I would look him up. He founded a company called Impressive Modular. The stuff that they build it's phenomenal. I mean, everything from craftsman to modern, and those really are custom homes. Yeah. And that's going to be, you can't scale it as much.
Right.
But
it makes sense.
Beautiful
It makes
homes.
sense for it to be affordable there has to be certain parameters when you're building it. I mean,
Correct.
It's definitely like clearly common sense on that one. But
So think of manufactured. A lot of people think cheap. It's not cheap. It's reasonably priced. In some cases it's going to be substantially less than site built. Modular is going to be very different. Modular in some cases is more expensive than your traditional site built, but there's still huge benefits to it. Especially if you're doing things like ADUs or you're building in remote areas or whatever. But modular product it's still typically quicker to build than site built. You don't have to worry about a lot of the issues like weather issues. You don't have to worry about your lumber getting stuck on site and getting wet and all that kind of stuff. Labor is another huge issue. We've been in a labor shortage for years. It's not getting any better. It's an aging population, and who wants to swing a hammer on a hot Texas roof when it's middle of summer? Yeah. It's whereas factories, not all factories are air conditioned yet, but they're getting there. But if you can build a home, have it delivered on site, your materials cost is lower, your labor cost is lower. Quality control is fantastic. Yeah. I mean, we build cars, we build computers, we build all that stuff in factories. We don't blink an eye. When you build a home, people go, wait a minute, that's weird. It's really not.
Yeah.
But modular homes are, a lot of these they're not necessarily terribly more expensive than site built. They can be, but the possibilities are incredible with these things. And most of them are higher end product.
How does having a permanent foundation on these cross mod? I know modular homes, the equity goes up over time, which is a thing when people think about mobile homes that can turn some people off. And I don't even know if that's true. Maybe you can talk to that. Was like a mobile home actually devalue over time compared to a house? And if that is true, does that same thing happen? Because these cross mod homes are, permanent foundation. The house is there, it's done. So
sure. Yeah. And I think it's a good question. I mean, if you look at the traditional mobile home, which again, they haven't really been called since the 70s, but if you're talking about something that can be moved, you're not really creating that same generational wealth that you can with a traditional site-built home. But the newer product that is permanently affixed, especially, the cross-mod product that these guys are using, that's very different. They're very new, so we don't know what appreciation is going to look like. But theoretically, the product is equivalent, if not superior. So you're not going to have those depreciation issues like you would on a quote-unquote mobile home.
That's what I'd think, because I know modular's been around a little longer than the cross mod. And modular homes
been around for a while.
Yeah, they don't seem to have that issue. Once the house is there, people don't even know it was modular, and so you don't have the problem of
you really
someone
can't tell.
having all those preconceptions, which it seems like is, if I had to guess, likely the case. If I rolled up on this house in my neighborhood in Lockhart, which apparently there is one, and I didn't know, and Lockhart's small, I probably have gone by this wherever it was, had no idea. If I was looking for a house to buy, was this a manufactured home is not on my list of questions I'm asking my realtor. I'm just looking at the house. So
well, and if you want to see it, so you go on to Champion Homes, their Genesis is their site. You go on the Genesis site, you can actually see that house that's in Lockhart being built and having it delivered, and it's pretty fascinating. But you're right, you can't tell the difference in most cases. In modular, you can't tell the difference at all. You'll never know. You don't have the same zoning issues and the same. Modular technically is considered a sexier product. Manufactured, it's getting there, but they are very different worlds. And anybody that builds modular specifically will tell you, these are the differences. And same thing with the manufactured side, they'll say these are the differences. They both absolutely have their place. Just I think the buyer demographic is going to be
different. Yeah.
I think you're going to be a higher end buyer. I shouldn't say that. It's going to be a higher end home, typically a higher price point, higher price per square foot. Whereas your manufactured is going to be much more to scale, you can crank these things out much quicker.
Right.
I think the quality is still there for sure. It's just, it's the difference between, say, a $300,000 house and a $900,000 house. There's going to be differences in finish out and design. And I'm glad you brought that, because the customization side, that's a huge difference. You can make modifications some to a manufactured house, but at the buyer level, most of them aren't going to do that, unless you're dealing with developers. But I will say that's speaking of developers, we're seeing a huge amount, good amount of increase in activity there, because you look at developers and they're starting to go, wait a minute, I can do 1 or 2 turns a year with traditional site built. It might take 6, 7, 8 months to build. I might be able to do 4 or 5 turns a year with manufactured. Because, the time it takes to have these things delivered, set on a permanent, and same thing with modular, theoretically. Is by the time you have it installed, you're probably talking 90 to 120 days.
That's crazy. And so you could, and we've always said custom home builders, the biggest profit for them is what they get the land for, right? Yep. So with the increased cost, especially in, let's take Austin, for example, it's harder for builders to have much of an upside, right, in the homes they're building, because, everything's gone up. Everything's gone up. Yep. So if they could, let's say they're not getting as much of a deal on the land, but they can get a better deal on a modular home that looks like a house, feels like a house, built just like a normal house. It's fixed to the ground. It's quicker. And they can turn these around and sell them for X amount where it's still affordable to where they'll sell quicker. It's kind of a no-brainer.
I think so, absolutely. And I think what we're also seeing is a lot of the rise of the ADU, and that's a huge thing for the modular space. California has a lot of faults, but one thing that they've really done a good job is take the whole ADU market very seriously. Yeah. It's not really a big thing here in Texas yet. As a realtor, I'm sure it seems to be more of a kind of an Airbnb, short-term rental type addition to a house. But the impact that can have on affordable, attainable housing, one of the trends we're seeing is a lot more generational housing, multi-generational, where you've got, multiple family members moving into the same house.
Yeah, your mother-in-law who you need the space for her.
Correct. Yeah. And we're seeing a lot more, just friends buying houses together, stuff like that. Well, imagine if you could have an amazing modular ADU just plop down in the yard, and have 2 or 3 of these types of structures. Then you create really attractive, higher density housing, increase the inventory, and again, they're not going to be cheap, but they're going to help the market stabilize and provide that extra inventory at a good cost. At
a good cost. Are you seeing an increase for loans for modular housing? I guess compare it to the single family home, I guess.
Yeah, absolutely. I think a lot of it is the demographic is changing a lot. And I wish I had this stat, but there was a study that showed how many people would consider a manufactured home versus site built. In 5 years ago, I think that number was barely into double digits. Now that number, again, I wish I knew the stat, but I want to say it's comfortably over 50% would consider manufactured housing. Right. And a lot of that's the younger generation, your millennials and whatnot. And you got to think about why. Well, they don't have the same stigma. Those of us, I'm almost 52, so I've been around enough to have seen, there's kind of the jokes and the snide remarks about manufactured, and, it's kind of the butt of the joke when a tornado comes through and all that kind of stuff. But there's a stigma. Well, the younger generation, they don't have that stigma, not as much. So I think the number is probably 60, 70% or more would consider it. So with that comes the ability to finance them. And I think, I think that mortgage companies are getting... Manufactured housing may not be the sexiest type of housing, but it's one of the, affordability is a big buzzword right now. We all hear it all the time. So I think a lot of mortgage companies are trying to get into that space, and they should.
Well, especially here in Austin with them passing, the law about, being able to get more homes.
Yes, exactly.
The specific acreage, right? And I'm wondering if that is going to increase. I'm wondering if you're going to see either the modular manufacturing home space, if they're going to see more of those you know,
I know
here in
you will.
Austin.
Yeah, absolutely. I think both for infill properties, and then I think you're going to see, you know, because there's been a bit of well, not a bit, there's been a substantial increase in suburban development over the last several years because people don't have to, you know, commute to work, although that seems like that's starting to shift again as well.
Or at least they don't have to drive in 5 days a week.
Yeah, the hybrid rule,
yeah.
I think, is a big one. So, but yeah, in as manufactured increases, again, for modular, never been a difference. So we can finance those identical, but manufactured, how that is financed by mortgage companies is changing fairly dramatically. There's still a lot of a stigma, and I think a lot of times it's just a lack of understanding. And, you know, there's a lot of great mortgage companies out there. Cardinal, we've specifically, you know, we've kind of planted the flag in the ground that we want to be the largest manufactured home lender in the country. Something I never really thought I would even get into or say, you know, and for land home, you know, again, there's that big difference. You know, we only finance traditionally, if you want to finance using Fannie, Freddie, 30-year fixed, that sort of thing, has to be secured by real property, permanently affixed and all that. Chattel lenders, they've been around for decades. They have a huge part of the market share there. We want to be the largest in the land home space. You just have to understand it. You have to understand, you know, it's different. It's a different market, how they're delivered, all of that kind of stuff. But it's not, the thing is though, Traci, is it's virtually as easy to find to go out and purchase and get a mortgage for a manufactured home as it is any other residence out there.
Right. Yeah.
And you're talking similar rates. If the general market rate is 6.5%, 6%, whatever it is right now, that's pretty darn close to what you're going to get for manufactured.
Right. Well, and it's just the fact that the loan is lower, right? Versus building a brand new custom home, which, you know, even like, I will say this, like even in the building world, I will say the quality it's not as good as it used to be.
People don't care.
They don't care.
I mean, they don't want to know what's behind the walls.
I mean, it's crazy to me that homes built in 2021, 2022, 2023 are already having issues, and homes that were built in 2000, 2005 are just steady as a rock. There's no issues. I mean, same thing with like AC units, right? AC units back then, they could probably last forever, and you're seeing brand new units break after 5 years.
Circuit breakers, all of that kind of stuff. Yeah.
Yeah. So, I mean, to me, I think it's an awesome option for people because they just don't make it like they used to when it comes to home building world. And if you're in a specific price range when you're building a home, unless you're in the super, super, super high end, I mean, there is quite a bit difference in quality, right?
I think, And I think as you start seeing some of these larger scale communities come online, like River Ranch is the California project, Fruition, the Denver project, that one's going to be really exciting because a gentleman named Joel Farkas, the developer, he's another visionary, much like James. It's an 8,500 unit community, but you know, the first phase I think is just shy of 1,000 units are going to be manufactured. Wow. But a lot of them are going to be site built. So trying to see how those two worlds coexist, that's going to be fascinating because I love, I mean, I cut my teeth. I grew up around the site built space, love that space. There's a lot of really good builders out there that are doing some really cool things like Beazer Homes, for example. We don't have them here in Austin, but they're hugely focused on energy efficiency, net zero, all that kind of stuff. Great. But how we see those two work together, that's going to be really fascinating. Very interesting. I'm excited.
Yeah well, because then you're really going to have an apples to apples comparison of really, is there any difference? I mean, if it's actually affixed to the ground in concrete, I personally don't know how you can really differentiate it because
they're using 2x6s and you know they're using a lot of the same materials. A lot of people don't realize that, you know, and you know, in terms of joists and studs and you know, drywall and all that kind of stuff. Yeah. And, you know, quartz countertops and all that kind of stuff. So, I mean, these are really nicely built homes, but a lot of I think that's part of the stigma developers have had is if I've got 500 lots, I don't want to give 100 or 200 to somebody that wants to do manufactured because then how am I going to find that's going to want to go, you know, traditional site built may come in and say, I don't want to build next to manufactured. I think you're going to see that stigma change. So it's really exciting to see a lot of these projects, you know, come to fruition over the next 6 to 12 months. Yeah. then we'll start to see a lot of perceptions really shift and change and whatnot. So, and I think that's cool because you have a lot of builders like your Lennars, for example, that are starting to explore. They've been doing it for a few years now. Like they used Icon's technology to build that community in Georgetown. So you're seeing the big guys look at it and go, wait a minute, maybe we're not, and I'm not saying they're going to start building manufactured houses, but offsite construction in general, I think, is going to permeate every segment of the home building industry. It already does, because I mean, there's a lot of prefab that goes into even custom homes, but I think you're going to see that technology, and I think you're going to see a lot of these builders that realize, okay, labor shortages are a challenge, quality control is a challenge, all that kind of stuff. How do we fix that? More and more of what is assembled on site is going to be built off site.
Right, because you'll have consistent work for those the people in the labor force, right?
Correct.
It's in one location, so like you said, the quality control.
Quality control is huge.
Yeah, because the biggest issue with our labor shortage, and especially in the home building industry, is that they weren't getting consistent work.
Correct.
And so, when you have a builder building homes and he's using specific subs, if he's not consistently giving them business, clearly they're going to find other work with people that are going to give them business.
Massive issue, especially during COVID. And the problem is and sometimes the workforce, the labor force can shoot itself in the foot, too. We went through issues where years back when labor was such a challenge that, crews would walk off.
Right.
If they didn't get an instant bump, sometimes they'd walk off and go to another house. That's horrible.
Yeah.
A home builder that has a very specific, I mean, especially the big publics, but even, your large regional builders, like a few of them, like Milestones and whatnot that we have here, they operate like a machine. If that labor doesn't show up, that's a massive problem.
It's a massive problem.
So, but I love that you keep bringing up the quality control thing. I think that's going to be a big factor. I think just, look, I have a growing, really passion for manufactured, but I think offsite construction in general, whether it's a traditional manufactured house, whether it's modular, or whether it's just, construction techniques that traditional site built guys do, I think you're going to see a huge amount of that really become a lot more prolific over the next 10 years.
Well, yeah. I mean, just think about cabinets. Now, a lot of people are building cabinets off site and then installing them versus building them on site. And people don't know any of the difference. And that's not even a question asked, right? So you're going to, like you said, you're going to see more things built off site.
Technology.
Yes, of course.
Substantially helps that. Technology is a huge part of certainly in the mortgage world. It's transforming mortgage companies, and that's going to be more of an issue. Let's talk about,
I'm going to get to single family homes and how y'all are kind of setting yourself apart with the lending aspects on just, your stick built homes, I love that you like to say, but how do you guys, let's stay on the affordable housing kind of topic. How do y'all at Cardinal Financial balance, being able to support affordable housing with the lending aspect of it, right? Like the financial implications of the lending world.
So I think it really just comes down to understanding, because it's not inherently that much more difficult, so how we fund, so these projects that I talk about, the one in California and Washington, Colorado, and all that, those are the developer funds the horizontal and the vertical. So they're funding the, cutting in the roads, utilities, all that. They're funding the purchase, delivery, all that of the home, all that. So basically the client walks in to the sales center, and these are sold identical. They have model homes, sales centers, all that kind of stuff. Buyer walks in, signs a contract. They, 30 days later, 20 days or whatever it is, they move into the house, just like you would if it was a Lennar, KB, anybody else. That part's identical. Where it's different is, what you first talked about, where the client walks into a dealer, retailer, whatever, and says, hey, I've got this piece of land out in, Bernie, and I want to put a house on it. And so that's where it becomes different. But that's similar, very similar to a construction loan. Problem is, people think construction loan, that's only for the affluent. You have to have perfect credit. You have to have a bunch of money to put down. You don't. I mean, you can do a $2 million VA loan, 0% down. It's incredible. But what we do, that process is a little bit different. So client walks into a retailer, client goes, let's say they go into Clayton, says, hey, this is the house I want. They sign a contract. We go through the process of closing on a construction loan. So we'll fund the manufacturer usually we'll fund maybe 10% up front at closing. Then we'll fund 80%. So we'll fund the unit once it leaves the factory, all of it. Normally in a construction loan, you'll do phase draws. You might do, the builder will submit a draw when you do foundation pour, and then after you do framing and all that kind of stuff. Well, manufacturer, because it's all kind of built at once, we'll fund that unit once it leaves the factory. So we fund the purchase of the land, or if they have an existing lien on it, we'll absorb that. We'll fund the purchase of the home itself, the delivery of the home, foundation, all the flat work, driveway, landscape, everything. So again, it's really similar to how you do a construction loan, but it's really easy. I mean, we can do, somebody comes in and says, hey, I want to buy this. I want to buy the land. I want you guys to finance the whole thing. 580 credit score, 3.5% down.
Yeah, that's not bad.
I mean, it's
attainable, very attainable.
Really, really attainable. In the case of VA, 0% down. The case of conventional, again, if you use, depending on the product, Fannie, you can go as high as 97%, little as 3% down. Same thing with Freddie. It's more complex because it is a construction loan, but really that's more in the back end. The client really doesn't even see it. The only difference is the client closes the loan up front. Once the house is complete, sign a modification agreement, they move in.
Right.
But it's tremendous how easy it is to do.
Right.
Now that works if it's a custom build as well. Modular home, same thing.
Yeah.
That's the problem is people feel like, okay, and that's the beauty of it too, is you get a veteran that comes to us and says, hey, I've been beating my head against the wall trying to find a house, an existing home. Can't find one. Either that or, VA buyers sometimes get discriminated against because VA appraisals.
It's the process. That. Oh yeah, my home. We sold our house, 5 years ago, and it was a VA loan, and we were really nervous about it because we were like, they're going to find. There's always something. It's very particular.
It's heartbreaking.
It was actually a breeze. It was not, but. Our house was built really well. So
and that's not always going to be the case.
But that's not always the case.
VA appraisers can be, I won't say anything, but the challenges. So the beautiful thing is say, okay, well, build the house you really want, whether it's manufactured, modular, stick built, site built, whatever, and build it on a piece of land that you really want, and be able to tell them that, zero down.
That's.
Whether it's $250,000 or $1 million or whatever, you can build the house you want as little zero down. And even if your credit's not perfect.
We all know cash is 100%. King. So if you can keep that in your pocket, then
Well, exactly. And, VA rates are great, and, there's no need for a second lien or mortgage insurance or anything like that. So a lot of times, even if a veteran has 10, 20, 30% to put down, well, the rates are good. They just, keep that cash, go invest it, whatever. So that's really, really powerful to be able to tell people that it's not just for the affluent. It's not just for people with a lot of money. It's not people with perfect credit. There's a lot of flexibility that we allow our clients to do.
Yeah.
The bottom line is in most cases, if it makes sense for them financially to buy a house that kind of passes the reasonable test, we can find a way to get them a loan.
We can find a way to get them a loan.
Yep.
Well, in your experience, what do you think lenders' roles are in, trying to help promote these long-term community developments in high-growth areas like Austin, like here? It's interesting because I feel like you guys are doing a great job, especially let's take the manufacturing housing world, in encouraging those communities and those developments all over the U.S.
Talking about it. Exactly what we're doing today. Right. I get really passionate about it, and it's just an area that, that's the problem is you have to keep talking about it because perceptions have to change, and then that sometimes that means, going to council meetings and stuff like that. And, talking about, okay, think about the housing needs that Austin has. Think about the workforce housing that's needed, and it's a challenge here because, housing is so expensive that a lot of the workforce can't afford to live in the area,
No.
and you're talking, it might be whether it's Tesla workers or, I think we don't put nearly enough attention on servers and waiters and bartenders and a lot of these people that without them, we'd be in a lot of trouble, but are they able to earn enough of a wage? So yeah, we have to focus on creating additional housing that people, that may not be making, because that's the problem is housing costs have increased exponentially, but wages and earnings
Have not.
they haven't. They just haven't been able to keep up. So communicating and saying, okay, well, maybe there's alternative ways to build housing, alternative methods, talking to developers, talking to, city officials. I think the real estate community as a whole has, there's so much power that y'all have. I think finding champions within, yourself and within the realtor community is desperately needed.
Yeah.
Desperately needed. Because let's talk about it. Let's start normalizing and destigmatizing things like modular. And even, you mentioned tiny home communities, there's some here in Austin.
Yeah.
But finding ways to say, hey, these are really, really well-built communities. How do we get out there and promote it? How do we understand these types of things?
Right.
And I think the manufactured space needs to do a much better job too, because I think this, from what I've seen as I've started digging in over the last few years, they've done things the same way they've always done it. Mm-hmm. And I think they get mired in that. Whereas what I love about Clayton and Champion and some of the guys there, they're not just looking at what there is now. They're looking at the next 5 years and 10 years.
Yeah.
You talk to the guys at Clayton, they'll tell you that right now, cross mods, the product we've been talking about, the higher end product, I think it constitutes 1% of what they do. And Clayton does, probably 70,000 homes a year. They want that to be 10% of what they do by the end of this year. And then the goal is what?
By the end of this year?
46%. Yeah.
Oh, wow. Okay.
Yeah.
Well.
And then, probably greater than 46 as quickly as they can get there. So it's definitely a growing segment, but we have to talk about it. We have to normalize it. And Travis, even you were talking about tiny homes and modular. That stuff you see all over YouTube, and you've all seen the videos of somebody that had a modular home built and even 3D printed. We need to normalize stuff like manufacture as well.
Yeah. Well, I think what you guys are doing is really great and really unique, and it's exciting because it's also it's in the business of helping people. At the end of the day,
just nailed it right.
Yeah, helping people,
it's
right?
What we have to do. And look, I think that especially when you're dealing with a segment of the market that's not sexy, you have to be passionate about people.
Right.
And again, I site built builders can do the same thing, but how do we help people realize that American dream? And I realize it's not for everybody. That's why we've seen the proliferation of build to rent communities, which are doing really well. But those that want to buy a house, how do we help them? But I love that you said that. Yeah. Because that has to be part of what we do.
It does. I think y'all have a great portfolio of, it seems like y'all can kind of do it all. So that's why I kind of want to talk, and we could talk, just briefly on the single family home loans. Yeah. With rising interest rates and rising cost of housing, how is Cardinal Financial differentiating themselves and being competitive in the market for helping people get loans on single family? So,
yeah, that's a good question. There's no real silver bullet. There never has been, but there's a couple different things. We have a program called Cardinal Elite, which is a phenomenal down payment assistance program that we do internally. There's a lot of down payment assistance programs out there, but a lot of times they've got income limitations, that the cost of the house, all of that. Cardinal Elite's a really cool program because you can do 3.5% or 5% down. You couple it on top of an FHA loan. So a buyer essentially is able to come in, even if it's in an area that wouldn't, because as you know, USDA loans, you can do 100%, but it's very specific on where and income limits. With Cardinal Elite, it's a DPA that doesn't have any of those limitations. Yeah. So somebody that's buying as long as it's within the FHA limit, zero down. Yeah. And they don't have to put any money down. And it's very flexible. A lot of times DPA programs can have pretty rigid credit requirements, whereas a program like Cardinal Elite can go as low as 600 credit score. we're seeing changes, speaking of credit scores, in alternative credit, things like rental income, things like bill pay and all that. Now I'm really excited that collections or medical collections are no longer going to be a factor. That's
I
huge.
wish Spectrum wouldn't be a factor either. Sorry, Spectrum, but you don't return one piece of equipment.
Funny because I don't know how many times I saw that as an originator.
You're going, wait, I returned it. Well, you don't have the receipt. And you're like, but that was 2 years ago. It drops your credit score so much.
It does. And people don't understand how much, and they go, okay, well, this collection was 6 years ago. They figure, okay, I'm just going to pay it off, which is the worst thing you can do. Because then it just refreshes it and brings it back to.
That's why everyone's switching to Hulu, right? To streaming online. No equipment to worry about.
Yeah, it's so funny you mention that. But yeah, so that's a thing. I think there's down payment assistance programs in general are a much bigger deal now. So making sure you're able to do that. Non-QM is a huge thing. So our ability to do, you got your traditional Fannie, Freddie, that kind of thing, portfolio type loans, but to be able to do non-QM, which is everything from complex income streams, I-10, foreign nationals, somebody that you have people that maybe they don't have a lot of income, but they have plenty of assets, how to do asset
or if they have a ton of money in the bank, but they don't have a job.
We can use that as income, so that's really important. The other thing, I know this sounds strange, but technology is playing a massive part of the solution for us, and that was a big part of the reason why I went to Cardinal. First, when I first learned that they had their own, we had our own LOS. Like, wait a minute, that's a little weird because the industry uses a different platform for the most part. But then when you actually get into it and dig into what it can do, it's phenomenal. Because the problem is when you have your high producing mortgage teams, they have large staff. Because there's so many different people that have to touch a loan to get it across the finish line.
Right.
You might have 10, 12, 15 different people. That's insane. What Octane, which is our LOS, allows us to do is dramatically streamline the whole process to the point where, it aggregates things like taxes and insurance and title work and all that kind of stuff. So you're not constantly having it takes, how long does it take to call a title company? How long does it take to call your municipality, get taxes, all that kind of stuff? It may take minutes, but that takes you away from doing what you were doing. You have to stop, call, and all that kind of stuff.
And if they don't answer,
all that kind of stuff. It allows. So if Octane can do all of that for you, that's hugely beneficial. And you don't need. So the traditional model, is you've got a loan officer, you've got a branch manager, you might have an area, regional, divisional, national. You have so many different people that have, and then you have on the loan, you've got loan production partners and all that. You have so many different people that are constantly, every time a loan closes, they get their piece of the pie, and you get that. How do you, there's only, right now margin compression is a real serious issue in our industry because right now somebody goes and buys a house and the interest rate's 7%. Well, the secondary market knows that once that rate gets down to 5.5%, they're just going to refinance out.
Right.
So the amount of money we make per loan is dramatically less.
Yeah.
Rates are high. How do we fix those issues? Well, we cut down on the amount of people that are necessary. I know that sounds bad, but that's just.
I feel like you might be able to have more quality people.
You do, and what they do, a lot of times they may move into business development roles, or you always do your best to reappropriate what they do. But like a huge percentage of all of our loans, just the closing and funding portion of it is done by AI, and Nick Flores, our CEO, Octane is his baby. We keep a staff of over 100 engineers. That's what they work on.
Yeah.
A lot of companies say they are a tech-based company, and a lot of them are. And it's great. But it has to be more than just writing scripts and marketing and all that kind of stuff. It's how do you take loans that typically can be written in days or hours and do it in seconds, and how do you reduce the amount of people that are required, all that extraneous stuff. So what that all does is allows our originators to focus on going out, helping more clients, talking to realtors, talking to builders, and it reduces the amount of people that are
human error too. And
that's a really good part of it, because human error adds a lot to the cost of a loan. You get DeFis, you get buybacks, you get all that kind of stuff, that cost. So if we can dramatically reduce the cost that it takes to manufacture a loan, that goes to the buyer.
Yeah.
the rates are lower, so that allows us to get really aggressive in rates. I think we're, I'm not saying we're always going to be cheaper than everybody else. There's always somebody out there that's going to, but what we're able to do is pay our loan officers well and give really, really good rates to buyers.
So technology and automation is really it's what sets you guys apart, and it's probably going to really help y'all evolve in the next 5 to 10 years.
Yeah. And I think that's the crazy thing. So what mortgage companies are going to look like in 5 years? Very different. I mean, same thing with real estate brokerages.
Right.
But I think you're going to see that, right now there's thousands of mortgage companies. That number's going to change. I think you're going to see probably less than 100 good-sized mortgage companies within the next 5 years, and the ones that survive are the ones that are very technology-laden,
right?
And ones that have started the process years ago. I mean, if they're just now starting, it's too late. I was reading, a good friend of mine, Eric Levin, he was sharing a stat with me the other day. There were 900,000 loan officers in 21. There's less than 200,000 now.
Yeah, same thing with realtors.
Exactly. Of those 200,000, less than 80,000 have done more than one loan in the last 12 months. Yeah.
Same thing with realtors. Yeah, it's insane.
And you can't live like that.
You can't live like that. I feel like a lot of people, they get in the business thinking, oh, this will be easy. And then COVID gave a very false sense of what being,
especially for realtors.
Because it was like boom, boom, boom.
Yeah.
And it's like, it's actually a lot more work than you think it is.
But the ones, the realtors like you and your brokerage, I mean, your branding is phenomenal and you have that expertise. You're able, a really, really, really good realtor, full-time realtor is absolutely worth the commission that's paid. I know that's a big issue for y'all right now too. But I think in a lot of ways that's a good thing though, because people are going to realize it's not for the faint of heart. It is difficult. It takes a long time to get into,
right?
And it takes hard work. That's one of the things that we really preach to our loan officers, especially the ones that are in the builder space. You got to get out and work. You got to get off your butt.
Yeah.
And the old saying or that I've heard is, well, I put in my dues, I put in my time. I don't want to do that anymore. No, I want them out visiting real estate offices. Just get off your butt. Go. Just go.
Well, because a good loan officer, it's the same thing. I mean, not everyone's equal, right?
Open
in the
houses,
sense, it's like important to have someone that can say, hey, this is why this is happening. This is what your rate's going to be. And this is why. This is why your credit score is affected, 100%. And it's educating them. And we always say, we always say knowledge is power. So the more you know, the more powerful you're going to be.
100%.
But a lot of people, when they're buying a house, they don't understand it. And I will say you could buy 5 houses and you still
don't understand
the process.
Not every bit of it. Or things come up. I mean, if you're a builder, you build 1,000 houses that are the same model, you're going to have a different challenge every time.
Right.
So I think that buyers, we know they're coming to us, they're searching for us digitally.
Right.
But when they come in your door, they want somebody that knows the Austin market, maybe specific neighborhoods, somebody knows the schools, all of those things that, and then there's going to be things that maybe they don't know. I remember when I was building my house in Cimarron in Georgetown, I had put an offer on a lot. It was under contract. And my realtor went out there just for grins, just to go take a look a second time. And she noticed that there was a lot of dirt being moved almost immediately behind it. Hadn't even thought about it, didn't even think about it a bit, and then all of a sudden realized that there was this brand new master plan, high volume, low cost neighborhood going up, and she goes, hey, you might want to reconsider at least how you position the house, but you may want to pick a different lot because that's what you're going to be looking at.
Yeah,
that's not stuff that you're going to know. You're
Yeah.
not going to learn it from, your Zillows and your Redfins and all that.
It's physically going out and putting eyes on the property.
Exactly. And eyes that are trained to look at it. Just like from a loan officer perspective, again, same thing. I mean, they come and shop for us digitally, but they need a loan. And rate is very important. You have to be able to get to the point where our loan officers can really show how good they are and how much they care.
Right.
But once they get there, you need somebody that says, okay, well, you say you want a 30-year fix, or you say you want a conventional. Have you thought about this? Or maybe you need to look at that.
Right. Just educating them.
Expertise, I think, is still going to. I think expertise and then human interaction, like we were talking about earlier, is still going to be very important for a while.
Well, what advice would you give to? I mean, anyone, right? But mainly, I guess you could say people that are, anyone buying a home, millennials, Gen Z, Gen X, whatever, all the Gen stuff.
Yeah.
I mean, what advice would you give them navigating this buying a home process, right? Because it's a tough market right now.
It is. It's really, really simple. Get a realtor and get a lender and get it early. Don't wait. A lot of times what'll happen is people will start down that process. They'll talk to a builder. They'll talk to, whatever. Getting a realtor and getting a lender very, very early on in the process is absolutely critical because, there's so much information out there on lending products, and you can find a lot of properties just by, these aggregate sites out there. But having somebody that can walk you through it, somebody that's your advocate, somebody that's your champion, that's probably the single most important thing. The other thing is consider, I know a lot of people go, okay, well, I don't want to give up my shiny 3% interest rate. I'm going to wait until rates come back down.
I was about to ask you about that.
That's probably
never going to happen.
It's never, well, it's not. And I think if we see rates down in the 3s and 4s again, there's massive issues that we don't, there's other problems we have to worry about, geopolitical, all that kind of stuff. Maybe they get in the 5s. I think they will. I think we'll see them some point, you can already technically buy down a rate even as low as, high 4s. You can get it down to that point. We can do that with our builders, and you can even do it with a resale home. Things like 2-1 buy downs and whatever. But here's the challenge. So I know that there's the marry the house, date the rate.
Yeah.
And even though that's kind of screwing us on the mortgage side, because that's the reason why there's so little profitability in a loan, because we've literally been telling buyers, buy the house you want now, just refinance it in a year or two. Secondary market knows that. But there's a lot of truth in it, though, because if I'm going to buy a house now, you got to really think about it. But rates stink, but
it's a buyer's market.
It's a buyer's market. And what happens when housing prices aren't going to go down? You ask people, are rates going to go down? Yeah, probably. When and if. We don't know when. Are housing prices going to go down? No. They're going to continue to go up. And what happens when, let's just say all of a sudden, a house that I'm buying for $500,000 right now, let's say rates all of a sudden drop to 5%, 5.5%. That's going to skyrocket because that's where and this far better than I do, there's so much pent up demand right now. It's just waiting and waiting and waiting. Once some of these big factors and, specifically rates drop, you're going to start seeing multiple offers again.
Right. Seller's market. Yeah. And then you're going to see,
you're going to be in trouble.
You're going to be in big trouble.
Yeah,
and I think buyers don't understand that. Right now, sellers are willing to pay for title policy. Sellers are willing to dock. Okay, I'll give you this. I'll give you that. Sellers are willing to pay for the 2-1 buy down.
Exactly. And things like the Cardinal Elite and all that, there's ways sellers can really impact that price to the point where, a 1.5% to the rate for a couple of years is going to be minuscule compared to a $50,000, $100,000, $150,000 increase in that house over the next couple of years. So I think being very strategic about it. I think that's what comes with getting with, really strong realtors and talking about, okay, what do we really see the market doing over the next year and a half, and determining whether it's best to build or buy. But I think also talking to a lender, can I afford this now? And that's really important. If you can't afford it now, that's a moot point. But can I afford it? And then also, what can I afford? Because I think the other problem is sometimes is you get people that, their eyes are a little bit bigger than their paycheck. So what makes sense? But then talk about, I think also, and I think that's where a good realtor lender combo works well. Have that conversation with the buyer. Here's what it looks like if you're buying now. Here's what it's going to look like in a year and a half. So let's talk about, $500,000 house with a 6% interest rate now versus a, $600,000 house versus with a, 5.5 or 5% interest rate later. What does that look like? So I think that part is really, really important because I think that the waiting strategy, it's not always the best. It's frequently not, but we're so preconditioned that rate is the single most important thing, and it's just not. It's important.
It's important,
without a doubt. But I would rather, if I had to do anything, I would rather spend a couple $1,000s paying for an updated title policy and refi the house than the the impact that $50, $100, $150,000 on a house, that's massive.
Well, especially, I mean, think about your property taxes. Like, I mean,
yeah.
believe me, I'm fighting Travis County right now on property taxes.
Yeah.
But I mean, I would rather pay lower property taxes every year. You know what I mean? And then, like you said, refinance. So
Correct.
I just think a lot of it is just educating them.
Yeah. And I love that because I think that's where, you know, whether we're talking to clients, whether we're talking to developers and municipalities, that's what we all need to get back to is be better educators.
Yeah.
You know, and educate our clients. And I think the problem is I think both for the realtor side and the lender side, but I think especially the lender side, it's so commoditized.
Right.
30-year fix is a 30-year fix is a 30-year fix. True. But that's where we can stand out as we act as consultants, we act as educators. And, you know, and I think that's a lot, I love that you do this. I don't see a lot of people doing it. Maybe they do, but I don't see a lot. Having conversations.
Yeah.
You know, having conversations and then getting content out there that educates buyers on, hey, here's the pitfalls to think about.
Yeah.
Sometimes you're going to educate clients and they're going to go to a different realtor, different lender, whatever. But I think that if you care enough, people are going to see it.
Yeah, they'll see it.
Yeah,
they
they'll
will.
see it.
And that's why we really harp ourselves on calling ourselves advisors, real estate advisors, because we're not just an agent. We're here to advise you on helping you make the best decision for your life, because this is one of the biggest investments anybody will make, right?
Biggest investment, most emotional investment in a lot of ways.
Yeah, I mean, you think about all the memories with kids and riding their bike in the street, or they fell off the tree and broke their arm in the back, which may not be the best memory, but it's still a memory,
but
right?
there's still memories, and we were talking about pets earlier and all that kind of stuff. I mean, this is like the American dream may change a little bit, and I realize again, I try to be very respectful because some people it just doesn't make sense to buy.
Right.
I get that, but the ones that want to, how do we help them get there? And sometimes that takes time. I mean, I think that's where, again, having a really good realtor lender combo, because if, you know, God forbid, they're not able to qualify, you know, they have credit issues or whatever the case is, they just can't quite afford it. Having an advisor that can help you go, okay, well, you can't right now. Here's all the steps that would take. Here's how, you know, if it takes 6 months, 12 months, and that's all stuff that we can help them with.
We can work together on it, yeah. And I
think that's really important because I think we're a society of instant gratification, and I get it, you know, but everything's available to
Amazon.
us now. Exactly, you know.
Get it at
today.
2 to 5 today.
Get it by 2 to 5 today.
Yeah.
But I think that if we truly care, then the people that maybe their credit score needs a little work or whatever, they still deserve a house.
Yeah.
How do we help them get there?
Exactly. Well, if people wanted to learn more about Cardinal Financial, how would they be able to connect with you guys, find you guys, if they wanted to learn more about y'all's lending programs?
Yeah, I mean, we have our cardinalfinancial.com website, and there's some really good resources on there. There's actually, you know, in fact, there's we just put up quite a bit of content about our attainable housing initiatives and all that as well. So certainly through the website. I know this sounds cheesy, but I try to be a man of the people, so people can reach out to me on LinkedIn.
Okay.
I don't care what it is. I don't care if you're a realtor, lender, buyer. Fortunately, I'm one of those people. I love what I do.
Yeah.
I get really passionate about it. I'll talk about it all day long.
Yeah.
You know, so reach out directly that way.
Yeah. Well, I love it. Well, this was such an enlightening and
really
intriguing conversation, and it was really eye-opening for me to learn more about I think just the creativeness, which is, you know, kind of where you're, you know,
I knew you were going to go there.
Creativeness comes out
you had that
from the beginning.
You had that all the way from the beginning.
But I mean, manufactured modular housing loans, I just think it's genius. I mean, because it, like you said, you're in the business of helping people, and there's no better way than helping people.
Yeah.
From all walks of life,
and they're
right?
homes. They're all homes, you know, whether they're modular, manufactured, you know, and that's where I think we all need to start going and looking, hey, you know what, it's nice to have a $2 million sale. It's also great to have a $200,000
right. Sale. Well, we say everyone's luxury is different. You know, like here, yes, we are a luxury brokerage, yes. But, you know, everyone's luxury is different, you know? So I love that you guys are really making that happen. So thank you so much, Brian, for chatting today. And it was wonderful.
Thank you.
And that's all we got. Thanks for listening, everyone.